Warren Buffett's financial investment strategy, the Oracle of Omaha. What if I told you that one man, starting with just $100, built a fortune worth over $120 billion without coding, without inventing, without even chasing the latest trends? That man is Warren Buffett, known as the Oracle of Omaha. And today we'll dive deep into his financial and investment strategy, step by step. Grab a notebook because this journey could reshape your financial future. Early lessons that shaped Buffett. Warren Buffett sold chewing gum, Coca-Cola, and even ran a newspaper route as a boy. At just 11 years old, he made his first stock purchase. Buffett later said, "I wasted 10 years of my life before that. You don't need to wait to get started." His philosophy? Start early, let compounding do the heavy lifting. The power of compounding. Buffett calls compound interest the eighth wonder of the world. Yes, he once explained, someone is sitting in the shade today because someone planted a tree a long time ago. For him, wealth isn't built overnight. It's built patiently, year after year, with the snowball effect of compounding. Long-term investing versus short-term speculation. Buffett famously said, "If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. So, his strategy is clear. While others chase quick profits, Buffett focuses on long-term ownership of businesses with enduring value. This is how he has consistently beaten the market. Buying wonderful companies at fair prices. Forget hunting for the cheapest stock. Buffett advises, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. He looks for companies with strong brands, loyal customers, and predictable growth, even if they cost a bit more. The moat concept. Buffett searches for businesses with economic moats. Just like a castle's moat protects against invaders, a company's moat protects it from competition. Think of Coca-Cola's brand power or Apple's ecosystem. These moats keep profits flowing for decades. Circle of competence. Buffett warns investors to stay within their circle of competence. He says, never invest in a business you cannot understand. This is why he avoided most of the dot-com bubble. He didn't understand tech at the time, and that decision saved him billions. Patience is power. Buffett's secret weapon? Patience. He's known for saying, the stock market is a device for transferring money from the impatient to the patient. And when others panic and sell, Buffett waits, and often buys more at a discount. That patience has paid off big time. The power of cash reserves. Buffett always keeps billions in cash. Why? To strike when opportunities appear. In his words, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Then during crises, Buffett steps in and buys companies at bargain prices. Investing in what you know. Buffett sticks to what he understands. That's why his portfolio is filled with companies like Coca-Cola, American Express, and Geico, businesses that are simple, predictable, and consumer-driven. He calls this investing in your circle of competence. Value Investing Foundation. Following his mentor Benjamin Graham, Buffett mastered value investing, buying stocks for less than their intrinsic value. He doesn't chase trends, he hunts for bargains. As he once said, price is what you pay, value is what you get. Avoiding debt. Buffett avoids personal debt like the plague. His advice is crystal clear. If you're smart, you're going to make a lot of money without borrowing. And by steering clear of unnecessary debt, he ensures freedom to act when opportunities arise. Living below your means. Despite being one of the richest men alive, Buffett still lives in the same Omaha house he bought in 1958 for $31,500. He eats McDonald's breakfasts and drinks cherry Coke daily. His message? True wealth is about discipline, not lifestyle inflation. The importance of reading. Buffett spends 80% of his day reading. He says, the more you learn, the more you earn. Knowledge compounds just like money. That's why he studies financial reports, business histories, and global markets, staying informed to make smarter decisions. Partnerships people. Warren Buffett credits much of his success to working with Charlie Munger. He once said, it's better to hang out with people better than you. Pick out associates whose behavior is better than yours and you'll drift in that direction. Philanthropy as strategy. Buffett pledged to give away 99% of his wealth. He views money as a tool, not an end goal. By committing to philanthropy, he ensures his legacy isn't just about riches, but about impact and responsibility. The rule number 1 from philosophy: Buffett's most famous rule is simple. Rule number 1, never lose money. Rule number 2, never forget rule number 1. While losing is part of investing, Buffett stresses risk management, careful choices, and protecting capital first. Emotional control. Buffett says, the most important quality for an investor is temperament, not intellect. He believes emotions ruin investment decisions. Fear and greed control the average investor, but Buffett stays calm, rational, and disciplined. Crisis as opportunity. During the 2008 financial crash, Buffett invested billions in companies like Goldman Sachs and Bank of America. When everyone else was fleeing, his strategy, be fearful when others are greedy, and greedy when others are fearful. Dividend power. Buffett loves dividends. Coca-Cola alone pays Berkshire Hathaway over $700 million a year in dividends. That's money coming in, even if the stock market is down. He proves that dividend-paying companies are wealth machines. The Berkshire Hathaway model, by using it as an investment vehicle, buying and holding great businesses under one umbrella, a genius long-term compounding machine. Staying humble. Buffett still drives himself to work, answers shareholder questions with humility, and avoids arrogance. His humility is part of his edge. Investors trust him because he's authentic. It takes 20 years to build a reputation and 5 minutes to ruin it, he warns. The power of patience in wealth building. Warren Buffett became a billionaire after age 50. Most of his net worth came after his 60s, thanks to compounding. His story proves wealth is a long game, not a lottery ticket. Advice to young investors. Buffett's advice to young people is timeless. The best investment you can make is in yourself. He recommends building skills, reading widely, and living with discipline. Your knowledge and habits will pay dividends for life. So, what's Warren Buffett's ultimate financial strategy? Start early, stay disciplined, focus on value, avoid debt, and let compounding work its magic. And remember his words. Someone's sitting in the shade today because someone planted a tree a long time ago. Now it's your turn. Which Buffett principle will you start applying today? Let us know in the comments, hit the like button if you learned something new, and subscribe for more deep dives into the financial strategies of the world's most influential billionaires. Stay tuned, because your financial freedom story could start today.